Hello, good evening and welcome. This is Biz1st Review 360, your weekly dose of the top business stories and developments impacting the Sri Lankan economy. I'm Nadim Majid. Let's get on with the program. How has the Sri Lankan economy performed this past financial year? What are the implications of the central bank's monetary policy review last week? Also, tax reform, wherefore art thou tax reform? These are just a few of the questions that I posed earlier today to Anushka Vijayasinghe, the Chief Economist of the Ceylon Chamber of Commerce. As we approach the end of this financial year with the Sinhala Tamil New Year just around the corner, there's a lot of talk about reforming taxes, right. Specifically income tax as well. Your thoughts?
So, Nadim, as you know, Sri Lanka is going through a period of fiscal consolidation, particularly through the IMF extended fund facility, where the tax agenda is a big part of that reform, particularly on increasing Sri Lanka's tax to GDP ratio from what it is now at about 11% to almost 15% by the end of the decade. Now, this is not going to be easy, and a lot of these are going to have a burden on business. But what we're seeing right now is some of these changes that were proposed in the budget 2017 announced in November, the November budget speech. A lot of them have yet to be implemented. A lot of them haven't been gazetted, haven't been presented to Parliament. Also alongside that, we saw the moves to bring in a new Inland Revenue Act. And this is also another recommendation of the IMF to have a more streamlined, easier to read, easier to use, more business-friendly income tax law. And now even that we had mixed messages on that, whether it's coming on the 1st of April or not.
Does the secrecy surrounding this worry you?
I don't think it's secrecy, Nadim, so much, because we've actually engaged, the Chamber has engaged with the Ministry of Finance a lot on these. I think there's a lot on the plate in terms of reforms, and maybe the process started a little later than it should have, and clearly this is not going to happen by the 1st of April, whether it's the proposed tax changes announced in the budget or the new Inland Revenue Bill. Clearly it's not going to come in by the 1st of April because it hasn't even been presented to Parliament. I think it's the uncertainty of when it's going to come. Will it then come mid-year in the new financial year? Will it be retroactive, which is unlikely? But it's this uncertainty that I think affects business. But broadly, our members, when we speak to them, they're in favor of a more streamlined tax system. It's this uncertainty and lack of clarity that's worrying. And for instance, another small example, the SVAT, which is something that affects exporters particularly. Until today, we didn't know whether it's going to be abolished on the 1st of April or not, because that was the initial moves. But there were some very good interventions made by the Honourable Prime Minister, Cabinet Committee on Economic Management. So after a lot of debate, they've decided to not abolish SVAT on 1st of April, which I think exporters will be happy about. But again, an example there of a lot of flux in the tax policy arena and not a lot of clarity.
Okay, we're also seeing a growth in public sector credit. Public sector credit has been growing. Is this a cause for concern, especially with the tightening of monetary policy to reduce credit growth? We've seen growth in public sector credit.
Yeah, so that's interesting, I think, because this growth in public sector borrowing or state borrowing has been a phenomenon observed more recently in the last couple of months. In the months before that, it was really the private sector credit that was driving growth, and state borrowings had slowed down, particularly with some of the SOE new state-owned enterprise management and reform agenda that had come in. But private sector credit growth hasn't slowed down much either. It's slowed down to about 20% growth. The central bank, from what we hear, they want to bring it down to about 15%. But state borrowings are high, and I think that's also a reflection of the slippage on some of these new tax measures which could raise revenue, and instead the state having to go out and borrow and not having enough tax revenue. I feel that the central bank's monetary policy decision last week to raise rates by 25 basis points was probably a reaction to inflationary pressures on one hand, but also not the fact that they are not seeing credit growth slowing down any faster and wanting to slow it down any faster. Because if you look at one of the things that credit has been going into, in the past at least, it's been imports. And if you look at the numbers for 2016 are out, imports are galloping. And alongside that, exports have been declining. So there's a lot of pressure on curbing imports as well. Credit-fueled imports. We're seeing some decline of that on the consumer goods side, but I think these are some concerns that I'm sure monetary policy authorities have.
As we go into the next financial year, on the part of the Ceylon Chamber of Commerce, what would you like to see the government doing to actually boost and to reinforce exports?
I think there are a lot of things that can be done. One is a more basic macro fundamental, which is the exchange rate. And already we are seeing some very encouraging moves from the central bank to try and make the exchange rate more market determined. Let the market forces play in and determine what the right price for the rupee will be, because that gives some predictability to the private sector, to exporters, and us not holding it artificially high, which then affects competitiveness for exporters. In the past, what we've seen is we keep holding on artificially, and then when it becomes unsustainable, we let it go, and that crash happens very substantially. And leaving it artificially high for so long has really hurt exporters in the past. So I think that would be number one. Number two is something that exporters want, and I think is already happening, is on the policy side. What are some of the policy and regulatory constraints? And on this, it's encouraging because, in fact, next week there's a big symposium to come up with a national export strategy, supported by the International Trade Center in Geneva, and from Sri Lanka it's the Export Development Board. We are all part of that effort, and I hope that it then goes from that strategy to actual implementation over the next year. And the third pillar, I would think, is trade facilitation. The WTO trade facilitation agreement came into force just last month. Sri Lanka is a signatory. There are a whole host of trade facilitation reforms. Essentially what we're talking about is better customs procedures, better clearances, better licenses.
So we've seen inflation. You mentioned inflationary pressures as one of the reasons for the tightening of monetary policy. We've seen inflation spike in the first quarter of this year. Do you think that this is going to be a continuing trend as we move through the year?
The drivers of inflation recently have largely been from the supply side, and this is mainly because of the drought. The drought has severely affected agricultural produce. Paddy has been substantially affected. We saw measures to kind of counterweight that by allowing imports of rice, but then you have the rupee depreciation, which makes imports more expensive. If we look at what is driving this recent inflation, it's largely on the supply side, and largely because of the drought. So I think once these abate over the next few months, once the monsoon season, the next monsoon, hopefully doesn't let us down for the third time, I think the supply side pressure will ease up, and inflation won't be driven so much by those factors. What we will have to watch is if credit growth doesn't slow, whether that from the demand side drives inflation. Also, I think this year will be interesting because the central bank is planning on going
so towards... So to put it, sorry, I'll let you get back to your point, but to put it in a nutshell, basically,
I don't think
if the rains come, and if the rain doesn't let us down, and if credit growth does slow, inflation will be manageable.
I believe so, and I think on the supply side, if the rains do come, I think that'll certainly put a downward momentum on inflation. Also, just to complete that other point, this year will be interesting on inflation because the central bank is planning on moving to something we all haven't experienced yet, which is this flexible inflation targeting regime. It's new for us, it's new for the central bank.
What does it entail? What is a flexible inflation target?
What this means is the central bank will set monetary policy, like interest rates, not looking at the amount of money that's in circulation. Let's say not looking at credit growth, but picking a particular inflation target that is likely to emerge in 6, 8, 10 months and working backwards from that and setting monetary policy along with that. So now it means it's a much more sophisticated way of doing it, but it won't be easy to do overnight, and a lot of us will find it hard to understand in the first few months, for sure.
Thank you, Anushka, again for speaking to Biz1st Review 360.
Thank you for having me.
Coming up after the break, what's in store for the EU after Britain officially files for divorce? Welcome back to the program. British Prime Minister Theresa May has formally triggered Article 50, commencing divorce proceedings from the European Union, which analysts say will test the unity of the EU while leading the UK into the unknown.
Britain triggers the process of leaving the European Union, with Prime Minister Theresa May informing Parliament that it is a historic moment from which there can be no turning back.
The government acts on the democratic will of the British people, and it acts too on the clear and convincing position of this House. A few minutes ago in Brussels, the United Kingdom's permanent representative to the EU handed a letter to the President of the European Council on my behalf, confirming the government's decision to invoke Article 50 of the Treaty on European Union. The Article 50 process is now underway, and in accordance with the wishes of the British people, the United Kingdom is leaving the European Union. This is an historic moment from which there can be no turning back. Britain is leaving the European Union. We are going to make our own decisions and our own laws. We are going to take control of the things that matter most to us. And we are going to take this opportunity to build a stronger, fairer Britain, a country that our children and grandchildren are proud to call home. That is our ambition and our opportunity. And that is what this government is determined to do.
With Britain triggering Article 50, a number of French presidential candidates, including far-right National Front leader Marine Le Pen, has said that they want to re-examine France's relationship with the European Union. Far-right's Marine Le Pen told a rally in Lille last Sunday that the European Union will die because the people don't want it anymore. Le Pen, who has proposed that France drop the euro currency and return to the franc, has told voters she would not abruptly pull France out of the bloc or the single currency, but instead hold a referendum after 6 months of renegotiating the terms of France's EU membership. An expert from the Sciences Po University said, though polls say Le Pen is unlikely to win the election, she and other candidates running on a Frexit platform such as François Asselineau and Nicolas Dupont-Aignan could still cost the Conservatives some votes. Election frontrunner Emmanuel Macron, projected by polls to beat Le Pen in the second round, is devotedly pro-Europe. He met with German Chancellor Angela Merkel earlier this month, promising to reinvigorate the Franco-German relationship and rehabilitate an European Union hobbled by Brexit, Donald Trump and a tide of anti-EU populism.
On Vital Statistics tonight, a look at the performance of the imports and exports sectors and the ever-widening trade gap.
Lanka's exports plunged by 2.2% to 10.310 million rupees in 2016 from a year earlier, amid lower commodity prices and reduced domestic output of export-oriented agricultural products. The largest contribution to this decline came from transport equipment as a result of the base effect, while petroleum products, tea and spices also contributed negatively. However, export earnings from textiles and garments, base metals and articles, leather, travel goods and footwear, machinery and mechanical appliances increased in 2016 when compared with 2015. The leading markets for merchandise exports of Sri Lanka during 2016 were the USA, the UK, India, Germany and Italy, accounting for about 52% of total exports. Imports for 2016 rose 2.5% to $19.4 billion US, with consumer goods down 8.4% to $4.3 billion US, intermediate goods up 2.4% to $9.87 billion US, and investment goods up 13.8%, driven by machinery and construction materials. The trade gap rose 8.4% to $9 billion US, with remittances and tourism chipping in with most of the money to spend.
When we come back, industry sentiments on the uncertainty surrounding the Hambantota port deal. Welcome back to the program. This week, Biz1st Review 360 sits down with an expert from the shipping and logistics sector to discuss the continued delays and uncertainty surrounding the Hambantota port deal. What to do with the Hambantota port? This is the question that's on the tip of every policymaker's tongue. Well, I'm sitting down tonight with Mr. Rohan Masakorala, the CEO of the Shippers Academy of Colombo. He's an industry expert, and he's here to talk to us about the delays, the uncertainty surrounding the Hambantota port, and the repercussions of continuous delay. Mr. Masakorala, thank you very much for coming on Biz1st Review 360 once again. Let me start by asking you, what is the reason for these continuous delays and the uncertainty surrounding it, and what's the message that it's giving to people in the shipping industry?
Well, as you know, Hambantota was commissioned in 2011. So we thought the then government had a business plan. That's what we were told, that there's going to be investment coming in, there's going to be factories coming in. But that didn't happen for nearly 4.5 years with that government. And a little bit of shipping happened with the vehicle transshipment in Hambantota, but the investment was enormous. But demand seems like now when you look at it, they have not done a proper analysis.
This is the question with Hambantota, isn't it? It's not only the port, it was all part of a mega project. The port, the airport, the highways. So you've got all that infrastructure just lying around there. Do foreign investors not see Hambantota as a viable, or let's speak from your perspective,
Yeah.
do people in the shipping and logistics industry, don't they see Hambantota as a viable option?
I have been in the industry for 25 years. I worked in the Ports Authority as a director. I've been in the shipping sector very much involved, talked about Hambantota. You see, our priorities have got mixed up. That's the whole trouble. When we had the port of Colombo to be developed at that time, we went and started building, you can remember, the Oluville International Port. That is the time the diversion of focus came into different people's personal agendas. Hambantota was always a logical location for offshore ship bunkering as a starting port. You see, when I was there, I must mention the name, I worked with Honorable Ronnie DeMille for 2 years as Minister of Ports, and we took a decision. He himself was very clear that Hambantota would never build through by getting international loans. It would be through the Port of Colombo's revenue, which was always putting in money into the treasury and making profits. And we had the plan to develop the South Terminal, which has now been taken over 85% by the Chinese. That money should have come to the people of this country.
And which is reaping
massive profits. So that should have been the strategy, that we should have invested at least 30, 40, 50% in that terminal, right? And collected money from that and build a small offshore bunkering port. That's how you expand ports.
Yeah. So those are the mistakes of the past. With the loss of focus, the shift. But now that you have this port,
yes,
what can you do with it besides the debt to equity transfer and handing it over
yes,
to the
debt to equity transfer is a problem that the government is facing at the moment. But in terms of ports, I have not met major shipping lines who are calling Colombo Port, who are interested in the East Terminal of Colombo, having such interest in Hambantota as far as I know it. So obviously there is no need of a capacity in Sri Lanka for 2 mega ports for containerization. If you do containerize Hambantota, Colombo will again lose out because you don't have that much of volume. That is not a good thing. So international shipping lines, who are the demand side of the game, have never come and requested government to please build Hambantota, that we will come there with more volumes. Instead, they have been asking for Colombo expansion for cargo. Hambantota came with, of course, interest of the former president's electorate, and there was a major infrastructure planning therefore. But as I said at the beginning, now I see that there had been no financial or marketing planning or pre-feasibility study on development of business into the Hambantota port. So the previous government also, I think, went into China for a SOT with a 35-65 kind of arrangement, and then getting into investments. So the new government, with the debt crisis coming in, looks at this 99-year-old lease, which I feel it's not right. We should not exceed 33 years if we can negotiate that as a country. Of course, we need foreign direct investment, and we need China because China has the cash, and China has a global plan called the One Belt, One Road initiative, and Hambantota area is definitely identified in that supply chain node. So that for them it might be in the medium to long term a very important location for their maritime and trade related activities.
So you feel that the Chinese are very keen on having Hambantota as part of their maritime Silk Route, and also at the same time I want to ask you, if this deal falls through, if it doesn't work out, if for example the Chinese get tired of waiting for consensus on the side of the government, what then? What will be the repercussions?
Well, there will be a short-term problem for the government. They are looking at the dollar sales and to get the balance of payment, some kind of a balance into right position. But I personally feel that in the China's One Belt, One Road initiative, this location is a very key location for them. So they would need it. So that is why we need to be a little bit more smart and ask for a bigger person.
So you feel that we have a lot more bargaining power than we think we have?
We do, but the time factor is the problem that we are facing, because it's a fantastic location for various types of other kinds of shipping, bulk shipping and ro-ro shipping and various types of non-containerized shipping. Even for containerized shipping, China's shipping companies can operate off Hambantota. So I am definitely very confident that they need this location because that is their strategic long-term plan. They have bought ports in Greece, they are buying ports in East Africa. Their road network is already working with Germany and big numbers of volume. So in the long run, I am not talking about 1 or 2 years. This is a China's 50-year or 5-decade plan, this one road, one. So for them it's an investment for a long time. For us the problem is a short-term issue. We have a debt problem. So time to negotiate and get the best deal is the government should go towards that. And I saw in the recent media that they are trying to go into a 60-40 kind of a thing, because Colombo we have already given 85%, which nobody talks about, right? 85% and not a cat.
But that was on 35 years. 35
years, but
yeah.
If we took it, that money would have been, if we invested 50% by borrowing, returns would have been next day. And our country, public of this country has paid for that breakwater $400 million. Yeah. It's our money, right?
Yeah.
So they have invested $500 million, they will recover it within 2 to 3 years.
Yeah.
Right? At the rate the expansion of volumes are going into that new terminal. So nobody voiced anything at that time about this 85% owned by China in Port of Colombo main terminal. Right? Whereas here there is no business. There is no takers from outside, whether it is mega shipping line like Maersk, MSC consortiums or other international port consortiums coming and saying here is our RFP and we would like to be a stakeholder. That has not come through. Right? For whatever reason, it has not come through. They are all interested in Colombo.
The geopolitical
yes.
tensions
yes.
there between India and China. They've got disputed borders. Also, when it comes to China is a very contentious figure in global geopolitics. We've got disputes with the ASEAN countries, with the South China Sea, and Sri Lanka is now becoming a piece, a very prominent piece on this chessboard, especially with the issue of Hambantota as well. What would this mean for business in Sri Lanka, the sign-over of the Hambantota port?
Well, in business, if the port starts working with investments and factories coming up, that would be good for Sri Lanka generally. But geopolitically, yes, India is worried. I meet a lot of Indians. I was just in China. I'm talking about this subject. They feel that they are surrounded through the Pakistan corridor on the other side. Then Myanmar, Bangladesh, there's a lot of Chinese investments, and I feel that this is not a purely an exercise of a military strategy or anything. It's more onto the supply chain and trade. But of course, there is
controlling global trade.
It's controlling global trade and the supply chains, which is smart move by China as far as I am concerned. But then India has the right to feel that it's being kind of surrounded by a party that it's not very comfortable with. I wouldn't say friendly anymore, because Mr. Modi and the Chinese president had a very good discussion, and 11% of Chinese FDI goes into India.
Yeah.
So in the long run, they are all looking at trade, but who will more benefit out of trade and the supply chains? Probably China has advanced itself way ahead.
To sort of put to rest the uncertainty and to give some clarity, some much needed clarity to the business community, to the shipping and logistics industry, and to the people of Sri Lanka, to give that clarity, what are the key areas that the government needs to focus on?
Well, the main worry, this confusion comes because there are different aspects of government on national interest. That's how the various, I have seen comments made. None of us know the real exact position where the government is at the moment. But as personally I can say, and as for the industry also feels, that government must renegotiate the terms in terms of more favorable to Sri Lanka in terms of ownership. If possible, have to have a third partner, so that there is no absolute majority for the Chinese. Maybe they could have over 51% where controlling and management can be done through them, because they will have the majority stake as well as the capability and the money, which others don't have. So they have those plus. So you will end up with giving them a majority stake, definitely. If the Sri Lankan government or a third party also can come in and have at least 30, 40, 45, 49, ideal would be a 51, 49 sharing if possible, but which might not be possible. Second thing, of course, we are very concerned. I am also very privately concerned. Why should we give it to 99 years? Because I know in Singapore, when land is given, this kind of projects are given, they give it for 33 years, and they revalue the whole place at 33 years and then renegotiate. We should go into, we're talking about 4 or 5 generations of which can change a lot of things, which we might lose if we go to 99%. Third thing is the national security aspects, the international conventions which we are signed up has to be, and it has to be one authority. Sri Lankan ports have to be one authority. It has to be there has to be an authority created and a regulator, whether it's a Chinese managed port or a Sri Lankan managed port or Indian managed port.
But there's one regulator.
One regulator has to come into business. That's what we feel.
Mr. Maskora, thank you very much for speaking to Biz1st Review 360. You've given us an enlightening discussion and also clarified certain doubts, and you've also, most importantly, given a way forward. Let's hope that the policymakers listen to what you had to say. Thank you very much.
Thank you very much.
Well, that's our show for tonight. Thank you for joining us. Don't forget to look us up on Facebook. You'll find us at Biz1st Review 360. I'll see you again, same time, same place next week. Good night and good luck.